Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 14th of May 2023. And last week we saw gold and silver prices go down. Gold just ever so slightly, but silver took quite a dramatic hit. Why? Well, we'll take a look. But just a reminder that this video is a repeat of the one we produced yesterday. We don't want our subscribers to waste their time. If you listened to yesterday, unless you really wish to, there's no need to listen further to today's, except for the fact we'd appreciate it if you'd sign up to our Finances Do Matter sister channel with the links placed below. Let's take a look what's been happening. Gold, silver, and the markets in general. We can see that gold fell $6 last week, falling from $2,017 to 2011, having hit a high of 2052 and a low of 2001. Although a lower high compared with the previous week, it was also a higher low than the previous week, and an overall fall of just 0.3%. In sterling terms, gold finished the week at £1,616, that's up £18, and in euros it closed at €1,854, that's up €23. Silver, though, took a hit and fell in the end $1.69, falling from $25.68 to $23.99, having hit a high of $25.94 and a low of $23.76, a fall of 6.6%, putting in both a lower high and a lower low compared with last week. In sterling terms, silver closed at £19.28, that's down £1.08, and in euros it closed at 22.17 euros, that's down 1.17 euros. The gold to silver ratio rose sharply from 78.5 to 1 to 83.8 to 1. Now the difference between gold's high and low was $51, and this compares with $113 the week before and $34 the week prior to that. And the difference between silver's high and low was $2.18, compared with the previous week's difference of $1.56 and 86 cents the week before that. Now this is what we said last week concerning our forecast. Quote, we can expect broad margins for gold and silver this week, but perhaps not quite as large as this past week. Therefore, our forecast for this coming week is exactly the same as it was for last week. We expect gold to trade between $1,950 and $2,075. Now this, it actually did, comfortably, staying generally within the middle of that range. We also stated that we expected silver to trade between $24.50 and $26.50, with $24.27 as outliers. Well, until Thursday, silver traded well within our normal range and then began to fall into the bottom of our outlier range late on Thursday, early Friday, where it remained, closing in the end 1 cent below the bottom of our outlier range. We said $24 and it closed at $23.99. Now, we shall take a look at what happened to silver late last week once we've examined the other financials first, which we'll run through now quite quickly. Bitcoin currently stands at $26,824. That's down $2,043. Equities were marginally lower, save the Nasdaq Composite. The Dow Jones closed at 33,300, down 374 points on the week. The S&P 500 closed at 4,124. That's down 12 points on the week. But the Nasdaq Composite bucked the trend and did what it did last week. It closed up, but ever so slightly. It closed at 12,284, which is up 49 points on the week. Oils were lower again, albeit slightly. Brent crude closed at $74.17, that's down $1.13, and WTI crude closed at $70.04, that's down $1.30. Yes, I was pleasantly surprised when going to the local gas station yesterday, we call them, I think, petrol stations here in the UK, to find unleaded petrol selling for £1.39 a litre, when not so long ago it was £1.80, and in some places more. Looking at the dollar index, that currently stands at 102.68, and that's also bucked the trend, reversing the recent downward trend and is up 1.44 points. Now, we said last week that we should look out for the CPI figures and core CPI figures on Wednesday. The reality was, however, that they came in broadly as expected, though the core CPI figures year over year were marginally lower at 4.9%, compared with 5% the previous month year over year, and against 5% expectations. The producer price index announced on Thursday was also lower, and all of this should have sparked a bit of a positive run for precious metals, and especially as initial jobless claims were up 19,000 compared with expectations, thereby suggesting a cooling off of the US economy and inflation marginally falling. Some commentators suggest that the consumer sentiment figures on Friday for May, which came in at 57.7 compared with expectations of 63, seem to have affected a change of sentiment, that perhaps the economy was heading for a decline, and this frightened the markets. Interestingly, though, this leads to a counter-narrative, in that if you feel recession is upon us, or due, then you would not expect higher interest rates. But what really argues against that point, though, were comments made earlier in the week, which took traders a few days really to digest, and they were those made by New York Fed President John Williams, who upped the hawkish ante on May the 9th, because he said this, quote, "In my forecast, I see a need to keep a restrictive stance of policy in place for quite some time, to make sure we really bring inflation down from 4% all the way to 2%. Now, of course, it's not at 4, it's at 4.9. I do not see in my baseline forecast any reason to cut interest rates this year, and this is what we've advocated from the beginning. There won't be an interest rate cut this year, or if it does occur, it will be in December. The FOMC won't have to decide whether to raise rates, though, until the 14th of June, or whether to keep them the same, or whether to lower them. We suspect they will remain the same unless, of course, the data that's going to appear before then, which is the US jobs report on the 2nd of June, and further inflation data on the 13th of June, if they come in far more robust than anticipated, then we might see another 0.25% rise. And again, we're of the opinion, rates should rise further in order to quash inflation. Meanwhile, pundits are sharing views across the spectrum. Some argue that at $24, silver's reached a strong floor, and buyers will now enter the market and push the price back up to $25 anytime soon. Others argue that perhaps we've reached a Minsky moment, and a Minsky moment is one that means the onset of a market collapse brought on by the reckless speculative activity that defines an unsustainable bullish period. You see, this is the problem. If the economy slows down dramatically and we enter a recession, silver will be badly hurt short term, simply because of the lack of industrial demand, but the prospect of interest rate rises should die down, as inflation should then fall. If we're not entering a recession, the economy is robust and strong, then interest rates will have to rise, thereby strengthening the dollar further and dampening down on precious metal prices. Somewhere in the middle is the utopian solution, but will it ever be reached or identified? Now, we've said for some weeks that as we enter the summer, we should expect gold and silver prices to fall back as people focus more on holidays and fine weather rather than their investments. Also, we have to bear in mind that what is helping to prop up gold and silver indirectly is both the fear of the outcome of the Ukraine versus Russia conflict, plus the potential that the US debt ceiling will not be increased, as each political party plays brinkmanship. Once these issues eventually become resolved, if they ever do, well, of course they will eventually, but we don't quite know what that result would be, then the fear factor and fear premium declines, and this will result in gold becoming less attractive to hold, particularly while interest rates are high. Of course, when they start to reverse and come down, then gold becomes increasingly attractive. This coming week, we have again a number of Fed presidents expressing their views. On Monday, Tuesday, Thursday and Friday. And Fed Chair Jerome Powell and Ben Bernanke will also be holding a discussion on Friday. We have retail sales figures on Tuesday, jobless claims on Thursday, and various housing data reports throughout the course of the week. So traders will have quite a lot to digest. Technical analysts are undecided too with regards to gold and silver, some suggesting this Minsky moment, others a bearish trend channel, and others stating that we've reached levels which are again attractive for investors. Though one should not ignore the rebounding of the US dollar last week in spite of rising rates by both the European Central Bank the previous week and the Bank of England last Thursday. Silver does admittedly remain under strong pressure amid recession worries. The weaker than expected Michigan's Consumer Sentiment Report put this additional pressure on silver. Therefore, our forecast for this coming week is actually difficult to predict because of these various countering narratives. We therefore expect gold to trade really again between $1,950 and $2,075, with $1,900 to $2,100 as outliers. And we feel quite comfortable really with that prediction. It's the same forecast for the past 2 weeks. However, silver is the tricky one, as it will be more volatile to the slightest piece of information or data. We therefore expect silver to gyrate quite considerably again this week, and to trade somewhere between $23 and $25, with $22 to $26 as outliers, because depending on trader sentiment, which will be based on very little really rather than rumour, conjecture and fear, we will see these movements in the silver price. Now, what do you think? This is a long video, we apologise for that, but there was a lot to cover. Please do share your thoughts. Meanwhile, we'd appreciate it if, of course, you give us a thumbs up, subscribe, press that bell sign, but also a further reminder to nip on over to our Finances Do Matter channel, links below, where there's a lot to come, as well as a lot already covered. Thank you for listening. Have a safe, enjoyable weekend. And as always, a prosperous week ahead.